Thanks for joining us once again. This is Greg. Today we focus on the fact that Tesla, even at 341, currently has a PE of 168. Now, we could try to get deeply into that number, but at minimum, it's assumed that Tesla's stock price should double, or the number of vehicles produced this year should double. So we explore this to better identify where we'll end up in terms of the stock price over the next few months. This is Greg for Teslafaninsight. Thanks once again for joining us. If this is your first time, welcome. If you're a repeat visitor, welcome back. Please join us on Patreon if you'd like some better ideas on investing and trading. So we're going to cover kind of 5 items. The first is to review our prediction that Tesla's stock price would fall into this area and why we put it out there. The second part is kind of where are we right now based on the data we have available. And the third part is what do we expect going forward from here. So I decided to just throw up a couple of charts on here that you'll see as I'm talking. One is Tesla's stock price and the PE ratio, and the other is GM stock price, and you'll see that there. So as I noted when the stock was at 430, I pointed out that that's a very high stock price. And one of my commenters, viewers, pointed out that I've been kind of negative on Tesla lately. Not at all the case. What I'm saying is that there are a group of people called speculators, and they can buy a stock and sell it anywhere they want at any time, and that's fine. The problem you have, though, is that there are a group of people called very large investors, particularly very large funds that handle retirements, and they represent above 60% of all the cash out there. And what tends to happen is sooner or later, those very large investors will actually turn around and say, wait a second, we know what those prices are, but there has to be some relationship between the growth rate or the earnings of the company and its stock price. And so what will happen is that sooner or later, those large investors' viewpoint will take over in terms of control of different stocks, and that includes Tesla. So my answer then to the 430, 440 stock price for Tesla was that as we reach those new heights, Mr. Trump won, and now we're trying to figure out, okay, how is Tesla going to benefit from this transition? Well, there's a number of things, as you know, that have happened. For example, it was just announced that the $5 billion plan to put charging facilities for all electric vehicles along the freeways of the United States has been canceled by the Trump administration. So what's the number one issue that most electric vehicle owners have been talking about? Range anxiety and access to ubiquitous charging. So Elon obviously did not have success in allowing this to occur, and so therefore we have this transition that's happening, and that will definitely affect motivation of buyers relative to all electric vehicles, including Teslas. So the next sort of issue that's going on right now is I just want to dive into a discussion of PE ratios. So for example, General Motors has a PE ratio of 7. What does that mean? Well, in essence, they're not growing very fast. They're more flatlining, going sideways. And therefore, the population increases at 2% per year. So in theory, there should be at least a 2 on that PE ratio. Then you add inflation to that. Let's say it's 3%. So inflation plus the growth population is about where they're at. And most of the other big auto companies are in that zone, especially if they don't have a substantial electric vehicle component. So where that leaves us right now then is kind of what's happening here and what should we expect next? Well, as you may recall, we were about 10,000 vehicles or so light in terms of the expected number of vehicles built and sold by Tesla in the last quarter. Now, there's a bunch of issues kind of going on right now that you should be aware of. if you type in status of the Cybertruck, a couple of things are happening with it. Number one, something like a third, if not half, the sales of the Cybertruck are people who would have bought a Model X or a Model S, but decided to switch to that vehicle. So therefore, Tesla is sort of exchanging one vehicle for another, and to some extent at the same price point. And here's another issue. So there was a 3-day suspension of production at the factory in Austin, Texas. That 3-day suspension didn't seem like a lot. I guess it wasn't a lot for the Cybertruck. But not only was there that suspension, but there's a problem going on with the Cybertruck right now, which is the Founder Series is $140,000. And a lot of the vehicles now from that Founder Series are being auctioned off in the $90K range. Call it 90, call it 110, someplace in that range is what I've been seeing over the last several weeks. Now, what's happened is the variant at $79,000 has now come out, and you get the tax credit with it. So we're now in an interesting position where should you spend $140 for this Founder Series, or should you spend $79K and maybe throw in a couple of extras of the options that might be offered by the Founder Series and call it a day? And it looks like that's kind of where the buyers are going. So what kind of happens with those hundreds, if not thousands, of Cybertrucks on a Founder plan that have been produced? Good question. I can't say I know the answer to that. I think they'll sit around until maybe they get a year out, and now they would be last year's product, and theoretically Tesla might cut the price on them, and therefore they get moved out and sold. But in the interim, we just end up with a lot of inventory that's not being sold because people are choosing the less costly alternative. So why do I bring up the Cybertruck in this situation? Well, the problem is that what you're looking for to justify a high PE ratio that's 100 plus is basically your revenue, profit, particularly profit, needs to double for the year. And I guess if we had a whole bunch of sales of vehicles, a high increase in sales of vehicles, and then we add into it FSD and other ways customers choose to pay more for Tesla, then all this could be justified. The problem we're running into, though, is if you look at any of the data that's coming out, I've been listening to US consumers, and I'm looking forward to your viewpoint, where they're saying, hey, after what Elon did, I'm not interested in upgrading to a Cybertruck, and I don't know if I'll stay within the Tesla family based on the trends of what he's doing with the government, as well as the trends of what's happening with the company. So this introduces, I guess, an interesting question mark. I read this, I don't know if it's true, but in Germany, based on what just happened and Elon's support of far-right party there and the Nazi arm signals, sales in Germany are down 60%, and they're seeing similar drops in sales counts across many European destinations. Will this stay the case? I don't know. Hopefully it doesn't, because every company needs to keep selling in order to validate stock price, validate keeping the doors open, validate building more vehicles. There's a whole long list. So the problem right now is that, for giggles, if you're growing, you have an above zero, let's call it 2% because population growth, PE ratio at least. If you're not growing, if you're starting to shrink, then that's a situation where you start losing your PE ratio that you may have. And the lower your PE ratio goes, the lower your stock price goes. So what I'm expecting to see here is if there isn't some way between now and the end of the quarter where the ship is righted, you know, we could see a 30 or 40 PE on Tesla would still be excellent. It would still assume, you know, the 20% growth for the year that Elon anticipated. without all the issues that we already have. But the problem is that that PE ratio brings the stock price back down into the 200 range, probably maybe 250. And so we're now in this, what's going to happen? We don't know, but the trends are not positive against where we are currently. So I'm really hopeful that you were able to get out on our warning 2 months ago that the doubling of the stock price after the Trump win was not realistic. But there's a whole bunch of trends that are negative for Tesla stock relative to Mr. Trump coming into office. And I believe all those trends are going to potentially impact negatively the sales of electric vehicles and Teslas. So, I would say be cautious here. Please drop us a note if you'd like to do a private tutorial when it comes to learning about options. Because if you're, I've been very disappointed, which is why I have not done a show in the last few days, because I hate seeing people lose money. And on Friday last week, I was having a conversation with a co-trader buddy of mine, and the stock was about 420, and then it has gone from 420 to 320, and it's only been 3 trading days. So it can move very rapidly to the negative, and all the money that you thought you had in Tesla stock when it was at $400 a share, it's now, let's call it 340 the last time I checked. So the issue right now is that because of the volatility that's going on, driven by what Elon's doing, driven by how Elon's activities are affecting the interest of people in buying from the company, I think there could be some very ugly numbers that come out of this in terms of sales of Tesla vehicles. And then the final sort of be aware zone is that China has become very aggressive about selling a lot of EVs and trying to sabotage Tesla a bit. But you also have a Chinese economy that's in very bad shape right now. So I'm expecting numbers to come out of there for sales that are not good, because Mr. Trump and China are somewhat jumping into a trade war, and the back and forth, I think, will negatively impact everybody, including Tesla. And hopefully the damage isn't too great before both sides recognize the need to back up, take a breath, and come out with fresh eyes. So I kind of blended where we are now with what I'm expecting to occur. What I believe is going to happen is that I believe that Tesla's stock price will stabilize a little bit here, but then some of the large institutions will really start doing the numbers over, and the buys and positive statements about Tesla's stock price we've been getting will be majorly impacted by the reaction of the most important markets for Tesla to some of the things that have been going on with the government behavior and other activities of Elon. My only question from this show, and I'm looking forward to you guys if you have any of these questions, is please, if you have any idea what the goal is here, please let me know. But it seems to me that there's a lot of confusion, and I think it's bad news for the stock, bad news for the company, and the growth of the original mission statement of the transition to electric vehicles. So the final thing I wanted to review here is I'm very confused. I'm in the scratch the head mode. And why? Well, the issue right now is that we have a backlog that's thousands of vehicles deep for the Semi. And we have the ability to produce the Semi at any factory in the world currently producing the cars. So what I'm confused by is why it is that we're not shutting down Cybertruck production for a couple of weeks and replacing it with a couple of weeks of Semi production, putting that in the hand of customers. And now we have a great situation where the slower selling vehicle in the Cybertruck gets pulled off production, the backlog in huge number of Semi is produced, and we could see revenue and profit and everything take off here. So that potential of new profit, new revenue, and sales, I think is probably 30 or 40% of the PE ratio, 30, 40% of the value of the company currently. And so I'm hopeful that, the robotaxi plays out and it actually goes onto the streets and starts throwing numbers. Same thing with the robot and its potential. There are a lot of potential things that can happen, but I don't know if they will all move through in a timely manner if he's busy doing other things. It could be the bid for OpenAI. It could be his work with government. There are a lot of other things that he's involved with. So that's my general take on what's going on currently. So I'm hopeful. I'm hopeful because as Elon loses a lot of money, his shares are pledged against a lot of debt. And hopefully that drop in price will cause him to say, hey, I want to keep doing crazy stuff, but the cost is pretty much the fact that I have to, the shares have to have a certain value level in order for me to have the cash to do other things that I'd like to do. And I'm hopeful that that actually plays out. The answer is, it's a hope, but the reality is that the value of SpaceX keeps rising so much that he's able to, work some deals on the side with that allows him to have plenty of cash coming in to do other activities. I think that's the answer to my question. But I am hopeful that we get some stabilization here and some fence mending with potential customers and current and potential customers going forward. So overall, I think that we have still another 20% down to go, only because the PE ratio has gotten so high. And then the other problem we're having is, if in fact sales and profit are declining, the PE ratio that's valid is actually getting worse, which is another reason why the stock price ends up going lower as we move forward in the near term. And hopefully the things that Elon's talked about happening in early summer, robotaxi, perhaps robots, etc., are all things that can boost the stock up. But my thinking is that there's no sense on my part of being negative. It's all about the fact that you kind of look at the data and what do you see? So my high recommendation is don't forget to hedge. If you can get out without tax consequences and then get back in after all the news hits, good or bad, great. But in the interim, I would encourage you to at least have 10, maybe 20% of the value of your portfolio set up in some put hedges. And if you want to learn more about hedging and puts, etc., please take time to drop us a note, and we'll send you an email, or you can drop us a note on Teslafaninsight on Facebook. Thanks for joining us on this part of the show. The next thing I'd like to cover today is our health tips as usual. Please remember a 20-minute walk daily, very helpful health-wise from a whole bunch of angles. Number 2, it is Valentine's Day tomorrow. Don't forget, no more than a salad type meal, because it leaves all that extra energy to go to your extremities that will not be going to your stomach. Number 3, circadian rhythms relative to sleep. For at least a 2-week period, try to maintain the same general sleep and wake time, because as you get into that rhythm, it'll set you up for a lot more health, better rest, etc. Once again, thank you for joining us. This is Greg for Teslafaninsight. Just au revoir, le hit road, hoda high fast, ni hao ma. In Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.